What if I told you that candlestick patterns, the ones you've been learning, don't work unless you're seeing the full picture? You've heard of the hammer, the engulfing, and the doji, but what if I told you that they're only useful in specific circumstances? Let's talk about why your candlestick patterns might be misleading you. Candlesticks are like a language. They're a way of communicating what's happening in the market. But just like any language, they can be misunderstood if you don't know how to properly interpret them. You can learn all the advanced patterns, but it doesn't mean you're fluent. And unfortunately, not understanding the context can lead you down a path where you're acting on half the information. We've all probably taken a language class or two in school, and while on paper we might look like we know what we're doing, speaking the language fluently is a whole different ballgame. Today we're going to break down the truth about candlestick patterns and why they don't always work unless you fully understand the context in which they form. At the most basic level, each candlestick is just a visual representation of market sentiment during a specific period. It's not magic, it's data. Every candle is telling you about the price action for that specific time frame, the open, the high, low, and close. But there's something deeper happening here. You're seeing the battle between buyers and sellers. Here's the thing, candlesticks don't act in isolation. They need to be viewed in context. They need to be understood as part of a larger story. Think of them like a sentence in a paragraph, not just a word. When traders only focus on one candlestick, it's like reading a single word and thinking you understand the whole story. When you see a candlestick pattern, what you're really seeing is a psychological shift in the market. A green candle could represent optimism, a red candle can indicate fear or pessimism, but it's the combination of multiple candles, their patterns, and their context within a bigger trend that tells you what's actually happening. For example, a doji might suggest indecision in the market, but it doesn't mean the market will reverse. It could just be the market taking a pause before continuing in the same direction. If you're looking at a doji pattern in a strong uptrend, it may be a sign of consolidation before another leg up. But if you see the same pattern after a long decline, it might indicate a potential reversal. The candlestick is giving you clues, but it's the context that will really determine the meaning. Now let's talk about recognizing candlestick patterns. There are hundreds of candlestick patterns out there, some simple, some advanced, but they all share one thing in common. They only work if you know how to apply them correctly. Let's take the hammer pattern, for example. On its own, a hammer could indicate a potential reversal, but it doesn't guarantee one. A hammer at the bottom of a downtrend could be the sign of a bullish reversal, but you need to consider the trend, volume, and other market sentiment before acting. What if the hammer is followed by another red candle? What if it's formed during a consolidation period in a sideways market? You see, most traders think that if they just memorize the patterns, they'll be able to pick winning trades. But without considering the full market context, candlestick patterns become a little more than random noise. Advanced traders know this. They've learned that candlestick patterns are just clues in a much bigger picture. A bullish engulfing pattern, for example, isn't a surefire win, it needs confirmation. Is it part of an overall uptrend? What's the volume like? Is there any news affecting the market? These are questions you need to ask yourself, as well as also understand that no matter how good a pattern, how clear the bigger picture, a trade could simply just not work out, and that's okay. So how do we apply candlestick patterns to our trading strategies effectively? The first step is to integrate them into a complete system. Don't make your entire strategy dependent upon candlestick patterns. Use them as part of your broader market analysis. I'll give you an example, but first a word from today's sponsor, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Imagine you're seeing a bullish engulfing pattern, but the overall trend is bearish, and now you're in a downtrend. Instead of blindly following the bullish signal, ask yourself, does this align with the trend? Is the market showing signs of strength in this direction, or is it just a temporary bounce? Lastly, does this align with my strategy? And do I have a data-backed reason to take this trade? By combining candlestick patterns with other indicators, you'll get a fuller picture. For example, a hammer pattern on the daily chart combined with a support zone and a bullish divergence on the RSI could make the pattern more valid. But without those confirmations, the pattern alone might not give you enough information. The goal is to use candlesticks as one tool in your arsenal, not the only tool. Whether you're using trend following indicators, volume, or even fundamental analysis, the key is to integrate candlesticks into your existing strategy. When you do, you'll be able to make more informed decisions. Here's the bottom line. Just because you use a specific type of candlestick chart or look for advanced candlestick patterns doesn't mean you're a more advanced trader. You can memorize every candlestick pattern out there, but without understanding how they fit into the bigger picture, you're just guessing. Remember, the most important thing is not what patterns you recognize, it's how you apply them to a full, well-rounded strategy. Trading can be as simple or as complicated as you want it to be, but in the end, all that matters is the result. And if you're chasing candlestick patterns without understanding the market context, you're likely missing the point. If you want to go deeper into trading strategies and learn how to use candlesticks effectively within your system, hit that subscribe button. Let's dive into the world of smarter trading, where you'll learn how to integrate candlestick patterns with other tools for more consistent results. Drop a comment below if you struggle with candlestick patterns, and let's discuss how we can simplify your trading process.